Hello traders, it's Samurai Trader. Welcome to a recap of the FESX 1000 volume 1000 share bar, and we're going to go through my core trading strategies. We've probably got about 5 or 6 setups that we'll look at and focus on today. Where I am in the world at the moment in Queensland, Australia, this particular market opens up at 5 p.m. It's the pre-market, opens up 1 hour earlier, and at 6 the main market opens up, and that's where you really start to get some volume. However, there's still some great trading opportunities in the first hour. So if we look here at 5:17 p.m. now, by the way, this is very early hours in the USA, and of course 8 a.m. in London. So it makes a great market for our Europeans. It's perhaps a little early in the morning for most of our traders in the US, but anyway, here in Australia and Southeast Asia, it's a great market. We also, one thing I should just mention on this market, there's great volume. You typically see 1 to 2 million contracts trade a day. So we can see here we had a short. We can look at our white paint bar. If we notice our zero lag, we're in a definite downtrend. We've crossed through the 89 EMA, and we've got a beautiful short here. That was good for up to 10-12 ticks. Depends on whether you've got a trailing stop or a fixed target when you trade this market. Now, one of the challenges with this trade here is that I always recommend that you put your stop 1 to 2 ticks, in this particular case points, above your closest swing high or swing low. Now that would have made a very large stop in this particular case. Now that's okay if your target is going to at least match what your stop is, which is, at worst case, I'd recommend you do. If not, you have a fixed stop of maybe 5 ticks, and if it goes up 5 ticks and stops you, it stops you. You look for another trade. That's just the way it goes. So we can see here anyway, we had a great momentum trade. There was no real concerns here. Down we went. Down the bottom here, I marked up, we had a perfect T7 set up. Let me just remove that there. We had a beautiful T7, which of course is a double bottom. Now when we have these double bottoms, and I don't recommend new traders trade a T7 or a T89, which is what else we had here. This is really for the experienced traders. Trade with the trend is your friend, as you hear me repeat every day. Now your entry was not until our zero lag turned cyan, which is right here. So your entry would have been on this particular candle here. Once again, very nice, 5 or 6 ticks, depends on your target. Now this is also a T89, and just for our newer traders, a T89 is whereby you have your possible trade entry outside this channel. Now let me just do something right here, if I may. I just want to just change that, just remove that, so you can see that there. I'm going to do one other thing, traders. I'm just going to disable that, so this makes the chart a little clearer. Now remember, one of the things you want to do, traders, is keep your charts as clean as possible. Remember, Malcolm Gladwell in his book Blink really talks about that you should be able to look at a trade and recognize it in a blink of an eye, and the more indicators, the more stuff on your charts, the more difficult that makes it. So anyway, we had a nice T89. Both of them were very nice winners here. Rolled up here. We then had a T1 still to the short side. Notice how we extended well out of a channel. So this actually made this a T89. Now a T89 is where you have your trade entry potentially outside the channel, because what it's going to do, of course, is spring back in. It's like a snapshot, or slingshot I should say. It's going to come back in. Now your entry was not until this candle, our paint bar, actually painted here. Why do we wait here? We wait for the zero lag to roll over, turn magenta, before we take the trade. That's going to save you time and time again. Now as you gain more experience and confidence in the trading strategies, you don't mind so much, because you know that probabilities are on your side. And as you know, really trading is about probabilities. That's what we really trade. So over here we had a nice 89 EMA bounce. You can see you came down. We're really sort of slightly still heading down. The EMA is still slightly sideways, but we are in a downtrend. We can see here that if we look down here, we can see our long-term stochastic is heading down. We've cut through it. Our short-term's cut down through this makes it a T10 or a money on the floor. So to recap that, when we see our long-term stochastic go oversold or overbought, and we see the short-term turn up, flick over, that is very clearly a T10 with an 80% plus win-loss ratio. So it's a great trade to take. We also had an added confirmation of magenta zero lag, and in we go at the close of that candle, and that was good for a good 8 or so ticks. Coming over a little further with another T1 signal. Now this particular T1 was really an 89 bounce as well. We all know we love the 89 bounces. You really had one here where the 89 EMA acts as excellent support resistance, and it doesn't matter whether you trade forex, stocks, futures. In any good market where you've got good volume, you'll find that you'll bounce a lot off your 49 EMA and your 89. Now my favorite in this particular case is the 89 because I also use it as a trend indicator. I'm mainly a trend trader, and I trade in the direction of the trend, and we can see we had a beautiful T1 here, and away it went. That was good for another 8 to 10 ticks. Now if your target is $100 a contract, you're actually packing your bags and finishing for the night just with your trend trade. You've already finished. Now down here we had this is really a T2. Now here, after you have any more than around 3 trades in a trend, alarm bells should start to ring that hey, the trend may stop. But how often do we stop trading and the trend continues? So this is a tough one. The only signal here that we may be changing trend direction here, and to be very aware, is that on our platinum here we can see we're getting very clear divergence. We've had it on price, and we've also had it on the platinum. So if you went short here or here, you were stopped on that one. You may have been stopped 4 or 5 ticks in that particular case. Our divergence traders, by the way, you had a beautiful divergence here. This is what we call a T19A. We can see here we've got a higher low on the platinum and a lower low on price. So this is a classic, and we can see here our zero lag has rolled over and turned up and turned cyan. Now up here we've got a 89 EMA bounce with the paint bar. Now why would you not have taken that trade? Well, very clearly we can see that the zero lag, the Z lag here, has remained cyan, has not rolled over and turned magenta, which is really what we want. Now we're now heading up here. You may have possibly taken this one, this particular trade. However, this is starting to become counter trend, because what can we see? What's giving us direction here? Well, look at our long-term stochastic. We can see our zero lags in a very strong trend. We've also got our channel is in a very strong uptrend, and our long-term stoch is up. So we're now looking for long trades now, and there's one other little thing here. Let me just reapply it. Where are we here? Let's put the alligator back on my trend line, trigger line, and look at that. When I get these crossovers, just here, this is a really good indication I'm going to probably have a change in trend, particularly when I've had 2 in a row. I had one right here and here. I call this, by the way, T98, and I'm going to do a whole separate recording on T98s because they're what I call a kit buck trade. They're just a great trade to follow. You're going to get 2 to 1 virtually every day of the week on these, and so it's a great win-loss ratio and a great return, because what the cross of a trigger line and the our zero lag really signifies is generally a great change in trend or a strong move. So you had a failed one here, and there's a reason why you wouldn't have taken that one, and that is because see how we've gone through here. So therefore you want to take your next up candle. But what's happened here, of course, you can't really tell because of this white paint bar, but this is a down candle. So you didn't take the T98 here, but you would have taken it here. So our T98 traders love these, and if you look at that there, you had one there, that one didn't qualify either, but then you had another beautiful one over here. So you can trade T98s just on their own. However, it is a change in trend, or in many cases a counter trend move. Coming back to our chart here, whoops, well, let me just duck back here. Here we go. Now we had a T1. We can see here our trigger lines in an uptrend, a little bit of chop here. This particular T1 you wouldn't have taken, and the reason being is that we're still magenta. Here I had another T1 signal. Finally I turn cyan, and in I go, and up we go. Now that was very good for another 4 to 6 ticks at least. Now here you also had a T1. However, one of the things I want you to be very cautious of is trades when you're outside, unless it's a counter trend trade, when you're, or a T89, is entering outside the trend, because outside the channel I should say. The further out you are, the greater the chance of a pullback. Here we're starting to get some divergence on the platinum, as we can see here. So if anything, if you're going to take these, you really want to scalp the market and just be careful. Here another 89 EMA bounce, beautiful 89 bounce. Your entry was not until this candle here, and that was good for 4 to 5 ticks, actually 4 ticks. Here another T7, perfect double top. Away we go. And here's that formation I mentioned, where you've got this crossover of what I call the blue line, alligator trigger line here, and our zero leg. Now look at that there, beautiful. Now what I would like you to notice, see the crossover there, here, look at this, it rode all the way up here, and look at this one down here. You had another one down here, but look at these for winners, just fantastic. So then you had an 89 bounce, another T1 to the short side, another T1. This is also a T2 trade, by the way, and so you've got T1s, T2s all over the place here. Here we've got a rise in long-term stochastics, so this is caution time. Be very careful when you have these. And we can see here this is also an 89 EMA bounce, which you would have entered on this candle here. Your stop is 1 tick above there, so even though it come up and it tested your stop, you still would have been in, and you had another short to the short side here if you're playing just the double tops. We also had down here, here and here, borderline. This one particularly is definitely a T89 trade. That is where we're well out of a channel. We've got some angulation, and we had a beautiful T89 up here to go short as well. Notice how we're well out of a channel, and your entries out of a channel. You've had the paint bar. We love these. These are T89. So traders, as we can see here, there was just so many with trend trades. Yes, we could talk about the divergence trades and whatever, but I really want to focus on traders mastering trading with the trend. Now I have so many traders that I work with where I say you've got to kill the monster of counter trend trading, because you're going to be, well, unless you're really going for your 2 to 1s, you're going to be killed quite often as a new trader on your counter trend. Stay with the trend. That's really important. And as Aristotle once said hundreds of years ago, we are what we repeatedly do. We are what we repeatedly do. So what's really important as a newer trader, trade with a trend. But otherwise, last night another big night for us trading the European market. So traders, until next time, if you're a new trader with me, please subscribe to my YouTube channel. Let me get that right, to spit all the bone out, and keep up to date with my latest trades. And you'll learn over a period of time these setups. We can see once again the T1s, your 89 bounces here, your T1, your T2. Look at this here, you got the slingshot. T2 is a slingshot. Just tons of trading opportunities. So traders, until next time, thank you and good trading.